Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we are, of course, just a couple of minutes now away from the closing bell. Of course, take us from beyond here to Beyond the Bell. Caroline Hyde, Taylor Riggs, Sonali Basak counting you down. And we go to our colleagues across in radio, of course, Tim Stenovec, Katie Greifeld. Take us beyond that bell with a global simulcast. We go across from TV, radio, and indeed our YouTube audiences to dissect what has been a really risk-on kind of a day and actually reaching the tops right now.
Yeah, that's exactly what we just spoke to Katie Nixon about. She's Chief Investment Officer over at Northern Trust Wealth Management. And she made the point of pointing out that, hey, it's the riskiest parts of the market that are actually seeing the buying right now. She asked the question, is this rally sustainable in the face of a Federal Reserve that's hell-bent on not stopping?
It's a great question. I don't know if we quite got an answer. It's a bit impossible to answer. I will note that just in the intraday action, though, it's interesting that even with stocks looking to end at session highs, you have seen a bit of a reversal in the bond market when you look at some of those yields over there.
Oh, Katie,
I don't want to front run you.
How easy is that? Look at that lead in. You take a look, and indeed, you're right. I mean, earlier, Sonali, we woke up and you had bonds rising another sort of 10, 13 basis points, not to forget the 20 basis point move we had yesterday. A little bit of that comes off, but I think overall, sort of big picture, the narrative has been the theme of further inversion of the yield curve, a big focus on the front end of which the Federal Reserve can control, and less of a focus on the long end as those yields fall as we think about maybe growth and inflation and less of maybe a Fed input immediately on that part of the curve.
Yeah, the bond market sending signals, the commodities market sending signals, oil lower, energy prices lower, but the NASDAQ on a tear.
Yeah, big tech really in vogue. You cannot fight a move when you have Amazon up more than 4%, and therefore we look at these closing bells, and no wonder there's confetti going on down at the NASDAQ at the moment, with the NASDAQ currently up 2.6%, 319 points to the upside, and significant volumes as well, 30% higher than your usual average. S&P 500 is up 1.5%, 64 points, let's call it, on the upside. That's also seeing volumes up about 13% versus usual. We're looking at the Dow Jones also up 1.3%, so industrials as well as your tech on the upside. And lastly, Russell 2000 gets a look in. Small caps, domestically focused businesses also on the higher side. The Russell 2000, as you'll see, if we can pull out with the camera, currently up 1.4% on the day, Tim.
Yeah, pretty broad-based, too. In the S&P 500, we're seeing about 4 stocks higher for every 1 stock that was lower today, Taylor.
You know, it certainly looks green on the screen, Tim, when you think about sort of what is tilted to the upside, the bullishness that you just mentioned. For a sector level, for our radio audience, a few sectors underneath the surface, it is all green on the screen. Retailers, technology, media, software, services, those are each up about 2.5% or more, going up to as much as 3.5% higher on the day. Down at the bottom of the screen, it's actually all green, Tim, even for some of the, quote, worst performers. One sector in the red, it's energy. It's off about 2.4%, questioning maybe what more supply could mean for this market.
And it was not difficult to find gainers today. I want to start with Starbucks. We got those earnings yesterday. The comp sales in China, they fell 44% during the quarter. Of course, that was expected. It was a little bit worse than expected, but still the U.S. sales were a bright spot. You had higher prices making up for some lower sales volume. Starbucks ending 4.3% higher. So also want to highlight PayPal. Of course, that was one of the big stories after the bell yesterday. We learned that Elliott Investment Management is now one of the largest shareholders in PayPal. You have analysts on the street coming out and cheering what's expected to be some tough love to come. Those PayPal shares finished over 9% higher. And I did want to end on Meta as well. It's rallying along with, feels like every other tech name today, up about 5.4%. Doesn't seem like a fundamental reason for this rally, but we did learn, of course, from reporting today that Meta is weighing its very first bond sale, Tim.
Well, I did find a few stocks, including one chip maker that was in the red today. Let's start with AMD, finishing the day down by 1.2%. This after the company issued a forecast for the current period as a slump in demand for PCs threatened sales. That forecast coming in on the lukewarm side. Match Group, look at that, finishing the day down by 17.5%. It's the parent company of Tinder, OkCupid, and Hinge. Shares falling after the company forecast weak revenue for the third quarter. That forecast fell short of analyst estimates, growth being affected by continuing fallout from COVID-19, and then another strong dollar story weighing on sales outside of the U.S. And finishing with Airbnb, finishing the day down by 1.1%. Shares falling after the company missed estimates on bookings. We got this news yesterday. We saw it move in the aftermarket too, highlighted investors and analysts' expectations for companies in the travel sector after a long COVID slump. We did see price target cuts today at least 8 Wall Street firms in the wake of these results from Airbnb.
I wonder how it's doing after hours as we get to the bookings earnings, which look pretty good. I won't front run it. I will look at GMM, Global Macro Movers, for our radio audience. I'm looking at WTI crude oil down 4%. This is we get OPEC just switching on the taps a little bit, but also, importantly, demand coming off significantly. And we see that in gasoline as well. That was pulling down. We're looking at natural gas still pushing higher in the US. Overall, steel, some of the key industrial metals falling on the back of worries about US, China, and indeed what the Federal Reserve is saying. The Fed did affect the US dollar. It was weakening, well, basically flat on the day. But mainly, the Fed talk was of the higher side of a hawkish tilt. But really, I think we dial back our concerns about what's happening between US and China, and that's why maybe the Japanese yen is weakening, why we see instead, interestingly, move to Canadian dollar, for example. Not really sure why that's higher when you have oil coming off. Sovereign bonds, it was a story of yields higher across the board, whether in Australia or whether you're over in Europe as well. Taylor.
A little bit of a different story, though, here within the U.S. Yields were certainly higher on the 2-year yield by about 3 or 2 basis points. But everywhere else, Caroline, a shift that came about midday as we digest some of the Fed speak. And then yields are actually lower as we think about maybe further inversion of a yield curve and a Federal Reserve that is indeed on its path to hiking in the face of inflation. We think about the yield story, go back a little bit to the equity markets, because we're getting some big numbers here out of Booking Holdings. JP Morgan, I think, was right when they said that they're still looking at some big, strong travel checks for this company. And indeed, second quarter revenue comes about right in line, $4.3 billion versus estimates of $4.33. Down to the bottom line, indeed, an improvement on second quarter adjusted EPS, $19.08 versus estimates of $17.50 per share, and adjusted EBITDA as well, an improvement. Tim, I leave you sort of with this quote when you think about second quarter room nights sold, well ahead of estimates, 246 million, and the CEO looking at record third quarter revenue. And he says, finally here, we've surpassed, in terms of room nights booked, Caroline, we've surpassed 2019 levels for the first time. Really looking forward to record third quarter and a very busy travel season ahead.
That's a read on the consumer. Let's get you another read on the consumer. eBay, second quarter net revenue, $2.4 billion, basically in line with expectations. They're seeing their third quarter adjusted earnings per share for continued operations, 89 cents to 95 cents. Now, the estimate was to sort of bang in the middle of that, 91 cents. Gross merchandise volume, $18.5 billion. So again, sort of coming in where the market had anticipated all of this. But this is a company that is being battered around by some macro headwinds, a US dollar that is strong, an international purchaser that they have, of course, and indeed a consumer that might be pulling us down a little bit in terms of desire to spend. But it is notable that they're managing to give us relatively upbeat forecast on that adjusted earnings per share. And they still see full year net revenue of $9.6 billion to $9.9 billion. Let's get into this with Poonam Goyal, I'm pleased to say, senior U.S. retail analyst at Bloomberg Intelligence. A relief, I'm sure, that eBay is standing by its full year guidance.
Absolutely, yes. It's great to see their execution comes into play here, and I think they've executed against all their plans. You're starting to see, that pay off, especially when it comes from payments and advertising.
You see this run up in the stock after reporting, and you have to wonder, are they out of the woods here when it comes to the headwinds that they're facing? Have they proven to investors in today's print that they can manage this environment?
Yeah, I think, when we talk about the environment today, there's a bifurcation, right? We saw that in Amazon versus Walmart's results. Amazon showed that there's still strength in e-commerce spending, while Walmart kind of showed a trade down or a trade away from discretionary towards more consumables. And what we're seeing with eBay is that the consumer is spending online, and it's very similar to what we saw at Amazon. So we think it just goes to show you that the strength in the consumer is still there when it comes to online spending, but the lower income consumer is a little more pressured. And eBay, being a secondhand marketplace, also lends well into that because there is a value proposition there.
And Poonam, expand on that a little bit, because I'm reading your notes from your preview. You talk about eBay's push for a high value buyer. What exactly does that mean in the context of what eBay offers?
Sure. So the high value buyer, that doesn't mean that it's the buyer that's spending the most, though it does end up being that. It's essentially the buyer that's shopping with eBay multiple times and is shopping multiple categories, not just coming into eBay for that one-off buy or that value coupon that may have been sent out. So it's a customer that eBay wants to retain and to grow because they do generate the largest portion of their sales. And we're going to see that trade-off happening all year.
Where does authentication come into this, Poonam? And the idea of eBay making sure that what you are buying on the platform is what is advertised. Really important.
It's very important. I mean, if you think about it, if you want to go buy a handbag today, you want to know it's real, right? So since eBay has launched authentication and it's broadened it out to multiple categories, including fine jewelry as of the latest, it's really helped them enforce credibility on their marketplace. So now people can trust that when they are buying expensive items, that they in fact are real. And I think they'll just continue to expand and grow their presence with consumers.
We want to thank you, Poonam Goyal, Senior U.S. Retail Analyst for Bloomberg Intelligence, really drilling into a company that's managing to execute, even though what's notable is this is a company that really doubled down on collectibles at a time that perhaps we pull away from that. And they, of course, talking in their statement about NFTs, the marketplace there that's providing artists a place to create. They acquired Known Origin during, of course, that quarter. Of course, a lot of the excitement around NFTs have dialed back, but there's still a company committed to focusing on collectibles in some way or
all right. Well, shares of eBay up by 3.5%, booking higher by 4.6%. That is going to do it for our cross-platform coverage. This is Bloomberg.